Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Friday, September the 20th, 2024. Some of you wanted to hear a little bit more again about Ethereum, as we have covered Bitcoin extensively. Remember, Bitcoin is the big 800-pound gorilla in the room, and I would say as Bitcoin goes, so go most coins. I don't know if I can say that 10 times very fast, but please remember, Ethereum needs to prove itself. That's where it's currently at. It is definitely improving, but it needs to prove itself. There's still not enough bullish signs on the daily chart, and there's still, therefore, too many alternative wave counts out there to be 100% bullish. Meanwhile, for Bitcoin, we have switched to the preferred wave count of the ending diagonal a while ago, and that has so far proven to be the most reliable wave count, in that we were looking higher. The other wave count with a B wave would be looking for soon lower, and that we haven't gotten. Instead, we've gone higher over the last 3 to 4 days. So that's the preferred one. Ethereum, there is still a lot that needs to improve before we can say new all-time highs or even new uptrend highs above this year's high are most likely. So we have to be cautious, and that is because the price action is just not yet conducive of saying, all right, we'll throw the towel in the ring, bears, and it is time to load up on this. Instead, I would remain cautious on Ethereum. Cautiously bullish, maybe that is a good one. I guess so. Just, it's still wish-wash. And so let's go to the charts, and we'll start with Binance Coin. Binance Coin, this is the preferred wave count. I start to be able to count 5 waves up from the September 6th low, which is pretty nice. 1, 2, 3, 4, and 5, which suggests that this green wave 1 of red wave 3 might top out pretty soon. Then we get a wave 2 pullback, ideally to somewhere around, I would say 525 plus or minus 10, 25-ish. So somewhere in this green wave target zone. And then we get blast off for 3, 4, and 5 of course, red wave 5. So the red lines, I know this is a little bit of a busy chart, are the lines or the path we have projected since August, that we would go down and we'll go up, down again for this red wave 4, and then up. Okay, so that is the projected path over the last month. So far, we got the down, a picture perfect 76.4% retrace of the rally that started at the August 5th low into the late August high in 3-wave fashion, in my humble opinion. And now it looks like another 5 waves higher. So we can still go a little bit higher to maybe 580, 590. And then we see a pullback. Again, the pullback is currently based on today's high, suggesting that it's the high, but it doesn't have to be that way. And a standard pullback to about 525, plus or minus 25. I don't know exactly the number. Why? Because I don't know how much of a retrace we're going to see. This wave 2 was 76.4. But we can get a 23.6% retrace. We can get a 84.6% retrace or 50%. That we don't know beforehand. So we'll see, but that would suggest after 5 waves up, expect at least 3 waves back down. And then if we start to apply here the Fibonacci extensions, it starts to look pretty good for where this wave 3, 4, and 5 should go to match it with the red wave 3, red wave 4, red wave 5. Okay. But of course, this will only kick in if we break above the red wave 1 high at about 620, 630. Bitcoin, this is our preferred wave count. The ending diagonal wave 5. So far, so good. Higher again. On Wednesday, we already turned bullish in the sense of that, well, this starts to look like a breakout. And we've raised now the bullish warnings levels, meaning the levels that the bulls need to watch to prevent losses or reduction in profits if you're so trading it. Now, as you can see, the 200-day simple moving average is stiff resistance, but it doesn't look like we have a touch and reversal. Instead, it looks like it might want to grind through it. Okay, so we'll see on the buy signal on the MACD, buy signal on the money flow. We're long and strong also on the RSI 5 here. And of course, we're above the 10, the 20, and the 50 as well as, of course, the Ichimoku cloud, but not yet above the 200. So the chart is still not 100% bullish. If anything, we're below the 200-day moving average out of these 1, 2, 3, 4, 5 variables divided by times 2, 10 variables, depending on how they can line up, bullish or bearish. We're still below the 200-day, so that is 1, that is 90% bullish. And of course, the 20 is still below the 50, and those two are still below the Ichimoku cloud, so that is also 10 plus 10 is so 70% bullish chart. That's how I would interpret the price action currently. I still expect a little bit higher prices, 66,000, back to probably 61, 62,000, as you can see here for the A, the B, and the C, and then the 4 and the 5. Okay, so this is the projected path, and we'll see how it's going to transpire in the future, because ending diagonals in general are quite tricky because they don't really have hard and fast rules, other than that the wave 3 cannot be the shortest wave. That's it. And wave 4, of course, cannot go below the start of wave 3, which is the end of wave 2. And that's pretty much all there is to it. There's no real Fibonacci hard rule either. Does wave 3 have to be 123.6? No, not really. It can be 138.2. It can be 161.8. Does wave 4 have to overlap with wave 1? No, it doesn't have to. Do we have to get 5 waves higher? There are some ending diagonal structures that look better as 3 waves. Maybe my interpretation of the price action after studying like 100,000 charts is wrong, but that's my general conclusion, that EDs are extremely tricky. So for now, we'll stick with this one. And as long as we hold above these warning levels for the bulls, I expect higher prices. First warning level is yesterday's low, just south of 62,000. Third warning level is about 60,400, which is, of course, critical because that's this A wave high. All right, so it's on the chart. Watch it and see what happens. For now, I prefer higher. Everything looks long and strong, 0 sell signals. Now let's go to Ethereum, and which chart am I? This one. We're going to go here to the daily chart first, of course. And the daily chart shows us that Ethereum finally has moved back above the 200-day moving average. Okay. And even the September 6 low could be this wave 4. Okay. So then this was 1, 2, 3, 4, 5. It is possible. But for now, we'll stick with this wave count. And we can raise the warning levels for the bulls slightly, of course, there. So this looks pretty good. As you can see, we are above the 50-day simple moving average, but we're still below the Ichimoku cloud and below the declining 200-day moving average. So this chart is much worse shape than that of Bitcoin, right? Look where Bitcoin is versus Ethereum. So Ethereum is not in great shape. So technically, Ethereum is how bullish? Well, this is minus 10%. This is minus 10%. That's 80. Minus the fact that we're having the 50 below the 200-day, that's 70. And the 220 is below the 50, that's 60. So bullishly stacked here as well, that's 50. And we're below, so at best 50% bullish. That's it. Technically, this is probably more like, if I do all the math correctly, 30% bullish, so 70% bearish. We need to get back above 2,800. That is a critical line in the sand. It was, of course, support, resistance, resistance. So back above 2,800 plus, then I'll start filling in these 3, 4, and 5. Until then, cautiously optimistic at best. Why? Because we can still do the 5, 4, 5, 4. Okay, that's about it. We could also do a triangle. And this is what we unfortunately get with sideways sloppy price action, meaning we get a D and another E, or this wave 4 has already bottomed as an A, B, C, and then we still get the 5. Okay, 0 indication this is the case. We need to break, of course, above this trend line, which is probably somewhere in the mid 3,500, somewhere around there, right? And then last but not least, due to this sloppy overlapping price action, we can go all the way down to 200 if it so desires. Yes, this is still possible. Okay, there's no reason why it cannot. We have to start seeing higher highs. And indeed, we are holding the 200-week simple moving average. That's great. This is the weekly chart, by the way. The other ones are monthly charts, so it's a different time frame. But due to this extreme overlapping price action we've seen, this year, where we've overlapped with some of the previous highs made last year, this is still possible. Okay, I wouldn't be surprised if this is the case, but we're not below critical levels just yet on a weekly or monthly closing basis. Remember, that is just south of 2100 to 2150, and yes, we went below it intra-week and intraday, but never closed below it. So that's good. And this is unfortunate nature. And this is why Ethereum needs to prove itself. We've seen a 76.4% retrace of the 21-22 bear market. So technically, this can be all there is to it. So don't start cheering just yet. There is possibility for 200. There really is. I need to really see price move above 2,800 at a minimum. Okay, so that gets us above the Ichimoku cloud. And of course, we want to get above the 200-day moving average, just as we see how important it is for Bitcoin. Until then, this is still possible. Do I like the triangle? Sure, I do. Do I know this is the correct price action? No, I don't. I need a lot more. And of course, we need to see price stay below that upper trend line to tell us that, oh, we might get another leg lower before we blast off. But an ABC is enough for a triangle. So Ethereum needs to prove itself, really. It really does. It is at the moment not one of my favorites. And maybe I'm completely missing the low here. That's fine. But I need to see a lot more evidence where I say, okay, I see buy signals. I see price improve. I see the moving averages turning back up, all that good stuff. And currently, they're not. This is a way different and worse shaped chart than this. So that brings me then to Link. Link is still pretty good. As long as we hold above last month's low, we can allow for the 3, 4, and 5 as shown. And then the 5 should go into somewhere around $60. Wouldn't surprise me if that's the case. But we have to hold last month's low. Solana, also here you can see the importance of the Ichimoku cloud and the 200-day moving average. It's still below it. So the 1, 2 setup, 3, 4, 5 is still possible. It's all question marks. Okay, still way too little price information. So the warning levels for the bulls have been raised compared to our previous update, which is good, which is now at today's low. That's the first one. It's about 141. The second one is about 135. The third one is about 126. And then the final one is 120. Break below 120. And I think we can once again visit the double digits 85. But this starts to look okay. We've been holding the 120 level infinite number of times, but you know that is critical. I have hammered that home a lot and a lot and a lot. And a weekly or monthly close below it is, in my opinion, not a good sign. But we're holding it this month, last month, the month before that, the month before that, month before that, month before that. And when if we, as you can see, close above it from a bullish run, it triggers 210, close above 210, right? That was resistance here, was resistance on the closing basis, and resistance above 210, 300. I would be shocked if we're not going to get there on a monthly close above 210. So that's really all I have for you. This update, the miners need a lot more price data. Also, those ones look weak and bleak currently. I still see not constructive price action. I need to see at least a rally, a drop, and another rally to start to become a little more bullish on those ones. And of course, the ETFs track Bitcoin and Ethereum, and ETFs for Ethereum don't look too great just yet either. Whereas the ETFs for Bitcoin do look constructive as well. Nice breakouts. Some of my ETF trading signals have buy signals for ETHE and BITO and IBIT and that type of stuff. So that looks pretty good. And as long as Bitcoin remains in this potential ending diagonal pattern without breaking below those key lows, those ETFs will follow along nicely as well. So for now, Ethereum needs to prove itself a lot. There's a lot of work to do for the bulls. Did we maybe completely miss the low that we don't see it yet? In hindsight, we'll know it. For now, the trend is still not our friend. We're improving. We're back above the 50-day simple moving average, which is a very good sign, but that's pretty much all there is to it. We need to get above the Ichimoku cloud. We need to get above the 200-day moving average. And that all requires, at a minimum, a break above 2,800. So there's plenty of upside left before we really can start to don our bullish cap. Right now, it's still predominantly, I wouldn't say like a sombrero type of cap, but it's definitely a bearish baseball hat. Okay, if we have to use size to express how bearish we are. That's all I have. Hang in there. The other ones look good. Binance Coin, Solana, Link still have constructive charts, especially Solana is a very loud and clear level that we're holding. And that's pretty good and very simple from a trading perspective. And please remember, never put too much in one basket. Always diversify, and diversification is, in my humble opinion, best served with different trading timeframes. Don't say, oh, I'm in Ethereum and I'm in Bitcoin and Solana. No, when cryptos crash, all of them crash, have different timeframes. It is often a better diversification. The same as, well, I'm in gold and in the stock markets as well. If things crash, everything crash. Okay, because everything is a asset that becomes a risk that we want to take off the books. So with different time frames, you can catch different types of trades. I highly recommend that instead of this weird idea that bonds or gold are safe in bear markets. They're really not. So anyway, that's a rant besides the point, but you get the idea. Different time frames help you capture different gains. Long-term gains are often big gains, and short-term gains are often small gains. Different risks involved as well, but make sure you always manage that risk because you want to have enough gunpowder left for the next bull run. Again, Ethereum needs to prove itself. That's the take-home message. Check the charts, see that there's still a lot of confusion out there and that the price action currently is not yet supportive of a new bull run. Not yet. Hopefully we're going to get there soon, but we need to see at least above 2,800. Take care, trade safe, catch you all next week.